Welcome to the Defence Property Podcast, the podcast where we talk about all things property investing and real estate for Australian Defence Force personnel. Whether you're looking to build and scale a property portfolio or relocating across Australia, we've got the insights and tips for less stress and more success. Let's dive in.
Welcome back to another episode of the Defence Property Podcast. We've got a special guest today. So Carla from Duty First Tax. Carla's actually based up in Townsville, so we're not in our usual studio, we're online. So Carla is the owner and operator of Duty First Tax, a firm built by veterans for veterans. They're a specialist tax firm for the defence community, both serving and veterans. And they've made it their mission that no soldier gets left behind on the tax battlefield. So today, answering some real questions defence members actually need answered when it comes to the tax returns. Probably most importantly, I'll start and say that before we commence this podcast and its content focuses on public available tax info and property processes and defence-specific realities. It's informative, but it's not tax advice. It's not financial advice. Make sure that you seek independent, legal, financial and tax advice for your specific circumstances. This is purely based on educational and publicly available information. Carla, thanks for joining me. Welcome.
Thank you so much for having me, Kane. It's always a pleasure to chat and provide some value with your viewers today.
Well, before we get started, why don't you just give us the story behind Duty First Tax and a bit of history of yourself and the business?
Yeah, absolutely. So a little bit about me. So as you said, I'm the founder of Duty First Tax, and Army is my background. So I did 14 years of ARA. I'm now a reserve captain. And honestly, I had the exact same tax experience I think most defence members have. I never really knew what I could claim on my own returns, and they were certainly never optimised themselves. Anytime I went to an accountant, I guess I'd end up explaining basic defence terms to them just to get the kind of the conversation and the meeting going. So for me personally, I've always been a numbers person. And one day I just kind of eventually sat down. I learned the system properly. I dug into how defence pay actually interacts with tax. Started by fixing my own tax returns. And that's pretty much at that point when it clicked for me. If I'm confused and I'm good with numbers, I think heaps of other members would be as well. So that's what pushed me to start Duty First Tax. We work exclusively with ADF members, ex-serving and their families, and nobody else. The whole purpose of us existing is to basically give people clarity, stop tipping the ATO, very important, and work to our mission, which is to tailor a defence-specific tax return in order to defend the ADF member from paying more tax than required. So that's what we do.
Yeah, lovely. Love it. I look back to, 2001 I joined Defence and, I was in Overpaying. I was Ramey, sort of my trade. And I remember, I think it was like after 2 years of service, someone goes, "Oh, have you done your tax return?" I'm like, "What's that?" It's not, you kind of left it to your own defence to fit, and then obviously when I did my returns for the year and stuff, you just kind of really are left to figure a lot of this out on your own, especially if you haven't been educated prior to that. So why do you think defence members struggle to get the right tax advice and property advice for when they're serving?
So if they are going to go see a professional, so kind of back on your story is either they try and do them themselves and, all the best, or they ask their peers in their section and you don't know what you're going to get out of that as well. But let's just say they do go and they go see an actual professional. I think the main reason for this, as why they struggle, is that people assume that all professionals are good at absolutely everything. And they might possibly give too much trust in the businesses that cater for absolutely everybody rather than for their specific needs. So I'm just going to take tax as an example. The scope to be absolutely all over each letter of the tax law, which is tens of thousands of pages long, plus you then add in the defence-specific items like how we're paid, what we spend our money on, all the benefits, and even culture plays into it as well. I personally think it's virtually impossible to be an expert on every single Australian's tax and property needs, as well as the defence members' needs on top of that. So and that's for tax. So if we're looking at property, if you're going to go through the process of buying a house using professionals like brokers, buyer's agents, banks or financial advisors that have never heard of the word DHOAS, I personally think it may create some unnecessary stress, wasted time or money.
100%. It's very critical. There's many different stages and different types of brokers, and, they might specialize in self-employed, for example, and a tax accountant's very similar, that they all have different degrees of specialty, and you really want someone that understands your unique circumstances, but also that's kind of lived or walked the path that you've gone.
Yeah.
They really understand intimately about your current position and your lifestyle. So, if you could sit down with maybe, at Kapooka or every 18-year-old and tell them one thing about money, tax and property, what would you say to, those young soldiers, even sailors and airmen, joining defence?
Absolutely. Well, in this scenario, I'm just going to use myself as the person I'm talking to. So I'm going to take myself, if I could sit down with 18-year-old Carla as a recruit on day one of Kapooka, I would tell me that my biggest advantage isn't my pay, it's my time. So at 18, compounding is going to be on your side in a way that you're not fully going to appreciate until you're 30 or maybe older. When I went through Kapooka 14 years ago, I certainly wasn't thinking about money or property at all. And actually, back then, I was a pretty good saver. I actually had enough saved for a house on the Gold Coast at that time. But I just didn't care, honestly, about investing back then. I don't even want to look now what the house would have been at today if I did buy a house back then. So yeah, I guess my advice is simple. I would say enjoy yourself. It's a really fun time, especially, joining the army in Kapooka. It's a good time. So have a good time, but put something aside every single payday. It doesn't have to be huge. It just has to be consistent. So if you've got a means to, I suppose, automate the payments into something, whether that's savings, investing, putting money aside for your first property, down the track, it's the habit itself that will put you miles ahead of your mates. You will have friends at Kapooka that are going to live paycheck to paycheck. Don't be that. Just do something. And like I said, it doesn't have to be a lot of money aside. Just do something and have the habit consistent. And I promise you, your future self will thank you so much for starting early.
Yeah, excellent. So such great. I couldn't agree more that, that building the habit and the discipline, it's the same as going to the gym and building, that routine and program. So it's the same with our finances and stuff, and consistency
Absolutely.
will always trump, those lump sums or the motivational injections. Discipline beats motivation when motivation lags. Discipline's always there, and habits and routines. But so you've probably done hundreds and hundreds of tax returns over the years, I can imagine.
Yeah.
What's some of the more, I call it the barbecue mafia in the property space. What are some of the more common tax misunderstandings that probably get discussed, around the barracks from their mates and things like that? What do you see most commonly?
Yeah, I think for what we see in the business, the most common misunderstanding I see all the time, and it's just, constant education and kind of realignment sometimes just to explain what's happening, is defence members, they come in and they have, I guess, this idea that tax time automatically means a big refund for me. So they just come in with that expectation. They walk in expecting money back without realising that the tax return is simply what we call a balancing event. And what that means, it checks in the year whether you've paid too much tax during the year or not enough. And basically, the result can go either way. Either you get the money or the ATO gets the money. So it's very hard within the year to make sure that it's done perfectly to the dollar. So we've got this thing called the balancing event, in July. So because defence pay is complex, like you've got allowances, you've got deployments, postings, HDA, HPAS, HPSEA, like these are just some things. There's definitely more. On top of that, outside of defence, you've got rental properties, HECS debts, shares, side hustles, and the list goes on. It's very easy to have your tax withheld wrong in the year because you've got so much going on. So that's why some members do come in and they've got a debt and then they've got no idea why they've got the debt. And there's so many reasons for the debt as well. So that really needs to essentially be explained. For us, I guess our job isn't just to lodge the return, like lots of accounts just kind of churn and burn and lodge it. We need to explain exactly what caused the outcome for that year, how to prevent it happening again if it is a debt, if you can, and how to legally, this is the key word, legally maximize every deduction you're entitled to. So once people sort of understand how the system actually works and realize it's a balancing event, the whole process does become a lot easier, definitely for us, but equally for the member as well.
Well, I think a key there is planning, so it's always easier to do something in advance than in hindsight or retrospectively. So if we can plan and actually understand, have a good relationship with our accountant that's ongoing,
definitely
we can, like you say, legally plan what can we do throughout the year. So one, we don't get hit with that big tax debt, and two, how do we plan where we can maximize our return? But
absolutely,
defence members do constantly, move around. Like it's the lifestyle that we live according to our current posting order, 2 to 3 years at a time, and we're on the move potentially.
Yeah.
From a tax perspective, what does the frequent relocation actually mean? Things like record keeping, deductions, and maintaining a property, for example.
So it can create a little bit of a tax problem for defence members, which is poor record keeping. So I would say most ADF members hate personal admin anyway. That's kind of a trait that seems to come through a little bit. And when you're constantly packing and unpacking and moving across the country, receipts do get lost and emails do get buried. So the ATO does require you to keep records for 5 years. You must do that. Good news is that they don't have to be physical records, so physical receipts. And I think a really easy solution, I like doing this myself, is just create a photo album in your phone. Just call it Tax 2526. Snap a photo of every work-related receipt you have or you think you have. Even if you're not sure if it is tax deductible, just snap it and throw it in there anyway. And then what you can do is you can throw that paper away. A lot of receipts fade anyway, and they're useless to you if they're faded. The ATO won't accept that if they're a faded receipt. So throw them away as long as you've got the digital copy. You don't lose the digital copy. It's backed up somewhere as well. That's fine. Do the same for a lot of invoices get emailed to people now. So do the same for your email inbox, is just create a matching folder in your inbox, call it Tax 2526, and every time you get an invoice come in for an email, just throw it straight in that folder, and then you can just send it all to your tax agent at the end. If you don't want to do that, there is actually, the ATO do have an app. It's called the ATO My Deductions app, and it lets you store receipts and track. The added benefit is in that it lets you track work-related kilometres in one place, so in the app. So I really like that as a good tool as well. And then what you can do with the app is it lets you zip file the entire thing, and you can email that straight to your tax agent as well, and then they can filter all through it. So I think that's pretty handy and pretty easy as well. In terms of property, specifically, I would say once you own a rental property, your expenses are going to get bigger. The rules get stricter. And the ATO does expect clean and accurate records. So it's really, really important to have that record keeping pretty tip top.
Yeah, definitely. So, with the defence, there's lots of, powerful tools like DHOAS, HPAS, HPSEA. These are all defence-related benefits. But they're also quite confusing, and a lot of people misunderstand or don't understand. And what part of these schemes do defence members misunderstand most from specifically a tax and compliance point of view?
Okay, so I can understand why people get confused because they are taxed completely different for each scheme. So I'll go through each one and just explain what's going on. So DHOAS is probably the one that you need to pay the most attention to. So if you do use DHOAS on your own home, and it's your main residence, it's going to show up on your defence payment summary as a reportable fringe benefit. Now, what that means is you don't actually pay the tax on that directly. Defence covers that and they pay the tax. But what it can affect is things like your HECS repayments, Medicare levy surcharge, child support, and other government benefits. So the number still kind of does matter for other income tests. Where people get caught out it's when they turn their home into a rental property with DHOAS. So if you don't tell Defence and apply this thing called the otherwise deductible rule, DHOAS will still show up as a fringe benefit on that payment summary, even though now the property is an investment property. So that can mess with all your income tests unnecessarily if you could get it essentially removed. So there is a form that fixes it. Most defence members don't even know it exists. You need to call 1-800-DEFENCE and ask for the otherwise deductible rule form if your property is a rental property only. So can't do that with own home, but definitely with rental property. So that's DHOAS. So that's probably the biggest one. Next one is the HPAS. Again, it's tax completely different. So that one is a lump sum that helps with upfront costs of buying a home in that posting locality. Currently, the rate is a lump sum of $16,949, but that's before tax dollars. So pretty much that one, it's simply classed as taxable income. So it's just whacked on top of your salary. It will get taxed at your marginal rate, just like your salary does. So after tax, that's the amount that you're going to see in your bank account once it's been taxed from your marginal rate. And then finally, we've got the HPSEA. That's probably from a tax perspective, like the simplest of the three. That's just a reimbursement for buying or selling costs for a home due to your posting. For tax purposes, it's actually what we call a non-event. So it doesn't go on the tax return at all. We essentially do nothing with it. So that's pretty easy. So yeah,
it's pure what you've paid, isn't it?
Yeah, exactly. So it's just like that's really simple. That's one thing like less off your plate for tax time. But yeah, the misunderstanding usually comes people just kind of assuming that all the benefits work the same, and it's not. In reality, they're all very, very different. So yeah, that's probably the main differences.
Yeah, no. So there's so much there to sort of break down, I guess. But you mentioned a lot of defence members sort of typically don't know what they can and can't claim. What are some of the surprising common deductions that they actually overlook, like that they could claim that they don't?
Yeah, absolutely. So I'm still shocked at how much money defence members leave on the table every year. And I think that's down to, it just goes into the too hard basket. Most people like money, but they don't really know how to get it or sort of how, or can't be bothered essentially doing the work. So one of my favourite tax quote is the Kerry Packer quote, "Pay your taxes, but don't tip them." So, I think that defence, I think defence members tip the ATO far too often and sometimes even without realising it. So I'll go the main ones that we see. This one's a pretty big one. So this is about ADF super. So if you're making voluntary after-tax contributions, like i.e. your take-home pay, into your ADF super, you can usually claim a tax deduction for this. So most defence members sit in the 30% marginal tax bracket, and the contribution when paid into your super is taxed at 15%. So that's a pretty meaningful saving that you get back. A lot of people don't even know that exists. It's something we tell all the time. I think it's from 2016. Don't quote me on that, when ADF Super came in, and it's for those newer sort of joined members that can make use of this deduction. Unfortunately, if you are with MSBS and DFIDB, you can't have this. So it's because they're a defined benefit scheme and it's very confusing, but it's just for ADF Super. So that's a big one there. So if you are making after-tax voluntary payments, look into it. The other one is like motor vehicle deductions that people aren't claiming. So if you are using your personal car for work-related travel, and this could be instances where you're moving between bases, you're going to PT either on or off base, you're heading to the clothing store, the lecture theatre, between units, going to the range, you're going to the WETS facilities. All of these kilometres add up pretty quickly, but people aren't capturing them. So The only thing we generally can't claim is home to work travel, or if you're going from your unit to the mess to eat lunch, not deductible. But yeah, most members end up they don't really keep records at all. So either what happens is they just don't claim at all, or they guess the kilometres. And now what the ATO are doing lately is they are tightening up on estimated amounts. So it is, kind of worth keeping a logbook, or I know some apps now even do GPS tracking and things like that. So you can actually capture, every time you're hopping in the car to do these little kilometres around base, it does add up at tax time. And then... Yeah, and then I would say the Medicare levy is another big one that is always a mistake. So we see many defence members who have been charged the Medicare levy when they shouldn't have been. And most of the time it's actually not because of the defence member who's self-lodged. It's because their previous tax agent didn't understand defence, and that's where we pick up most of the problems. We're one of the few in the Australian society that gets the exemption, and almost every other taxpayer has to pay it. So they just don't pick up on it enough, especially if they don't have enough or they don't have any defence clients. They usually miss that one. So our firm, we've corrected multiple years of returns for clients. But I guess the good news for members is that you can go back to... either you yourself can have a look through and see if you have been paying Medicare levy as a defence member, and your tax agent or yourself can go back and fix it, or request the ATO to make the change for you. I think it's worth having a look. It can be sometimes over $1,000 per incorrect tax return to check. And it's really easy to check. You literally log onto your MyGov account. You'll see all the years that you submitted a tax return. Click on the PDF that says Notice of Assessment, and it will come up with your Notice of Assessment. If there is a Medicare levy in there that you're a defence member, it may be something that you can have back. I will just say a caveat with this. Note that not everyone in defence is automatically entitled to a straight-up Medicare exemption. Have a chat with your tax agent, or do your own research and see which Medicare exemption category you fit in, because there's a couple of categories. But normally, if you're single, you don't have a family, you're in defence full-time CERCAT 7, you're usually exempt fully. I will just say a couple of last points. I could go on forever, but there's the final ones that we just see, kind of smaller ones, but we see these ones all the time, is laundry for uniforms, which is actually different to dry cleaning. So yes, the ATO will give you a deduction for washing your own uniform and in your own washing machine. They'll allow a deduction for that. And the other one is the cost of your tax return itself is actually a fully tax deductible item. So how that looks is if you're in the 30% tax bracket, you claim your tax agent fees on the next tax return. And basically that means if you're within that general 30% bracket, it's a 30% discount on your tax return fee. So that's something to keep in mind as well. And that's probably the main ones. I could honestly go on for a long time with these, but that's probably the ones we see the most.
I can imagine it's a bit of a minefield, and there's so many, rules and guidelines and interpretations and misunderstandings and stuff. Where previously, can you give an example where a defence member's gotten themselves into trouble with the ATO simply because they just didn't understand the defence allowances and how they were taxed and sort of what happened and what was the outcome?
Yeah, for sure. So yes, there was a very real case. The case is called Lambourne versus the Commissioner of Taxation, i.e. the ATO. Basically, it was where a Navy electronics technician claimed almost $11,000 in deductions that would have flagged with the ATO because it's quite high. Basically, what happened is the ATO reviewed it, and then when they did their checks and balances, they said, hey, there's only $359 we think is actually allowable here. What happened was his refund that he was expecting flipped into a debt. And then on top of that, just to be extra nice, they slapped on a 25% penalty on the debt amount. So what happened was he was gutsy, and he took the ATO to court, and ultimately he lost. So yeah, and he still had to pay his fine. So the lesson I think's pretty simple here is don't guess your numbers, don't stretch the truth, don't make up numbers. Currently, because we are in 2026, AI is getting pretty good. The ATO's data matching is actually extremely good right now. They know a lot more than you think they know. So it's out there, and it's just claim everything you're legally entitled to. Make sure it is real and it's backed by evidence or a receipt. Personally, I just don't think the stress and the cost of getting it wrong is ever going to be worth it for you. So that would be my advice.
Yes. And 100% I'll echo the data matching is phenomenal at the moment.
Very
We've
good.
all seen what sort of, AI and ChatGPT and all these forms out there are doing, and it's naive to think that the ATO wouldn't be using that.
Absolutely.
And, with assets and property, there's so many ways to build wealth and get ahead of that. You can do it with a straight bat. You don't need to be doing anything outside of your left and right of arc. Just stick within those boundaries and you can do very well. So just, again, you don't have to figure this out yourselves. Hence, having a good accountant that's understanding of the lifestyle that we live and what is within those boundaries of playing that tax game. But flipping over to a bit of like property sort of or questions, what's a defence member, or when a defence member buys a property, what's their tax obligations and considerations that they don't often realise they're signing up for?
So when they buy a property, yes, you are buying a home, which is amazing and very exciting, but you are also taking on a tax asset, and the tax rules start from the day that you purchase the property. So how the ATO treats that property is going to be kind of one or two options initially. It's either going to be your own home or it's going to be classed as a rental property. And those two paths have completely different tax consequences. Regardless of which one it is, the biggest obligation people miss, and I said it before, is the record keeping. So if you are purchasing a home, you need to, every cost you incur from the moment you purchase that property, you need to keep those records. And that's stuff like stamp duty, legal fees, loan costs, inspections, renovations, literally everything associated with that property. And like I say, even if you're not sure, just throw it in there anyway, and the tax agent can deal with it and sort of pick it apart. It's better being in there than not. All of that is going to form part of your tax story later. So I just think if you're not keeping the records from the start, you are setting up yourself for like time wasted later or just problems down the track. So do that.
Yeah, nice. So when a defence member buys a property, and let's say they were in Townsville, they buy a property up there, but then they get posted away, to a new locality, how does the ATO then look at that property that was a known occupier? And now they're going to keep the property, they're going to put a tenant in there. What's the tax treatment of that property, and what are some general rules that people should be aware of?
Okay, so as you said, it is extremely common for defence members to buy a home and then get posted. That's the nature of the life, I suppose. Once they're posted, that home becomes a rental property. And essentially the moment that happens, that's when the tax treatment changes. So where people get caught out is not understanding the rules that apply in each situation. So there's two big concepts I think every defence member needs to know, or just briefly, basically research, just at least know about it. But the first one is this thing called the main residence exemption. Go find out what that is. And then the second thing is called the 6-year rule. So go research that, even just know what it is. Basically, those rules will determine whether you'll pay capital gains tax when you do eventually sell, if you do sell. And if you time things correctly, they can save you a lot of money and a lot of stress along the way, just by having the information ready to go. So once the property does become a rental, then you'll also step into a different set of obligations on the tax return as well. Each year by year, you need to declare the rental income and claim your expenses yearly on your tax return. So that's probably the other lot of admin on top of doing a normal tax return. You've now got to do all this as well year on year. There is a pretty good guide that the ATO publishes. It's called the ATO Rental Property Guide. I think they release one every year or every financial year. I think it's a little bit dry, but it's a great resource. It's got everything in there. So, if you need to get to sleep, also give that one a read. But that's pretty good as well.
I think you mentioned a good one there. Something that comes up very frequent in a lot of the conversations I'm having with, with homeowners and stuff is the main residence exemption and 6-year capital gains exemption. And people, I think a big misunderstanding that I come across is I bought a property in Townsville, I've moved to Darwin, I'm going to buy a property there. You don't get to claim that exemption or the main residence exemption on 2 properties for that 6-year period. You can only claim it on 1. It's not an immediate decision that needs to be made, but it's still something to be aware of. And that's where having that good accountant can talk you through that is I feel critical to understands.
Totally.
Because it does, and I don't want to harp on, but that planning side, like when you're talking about your annual tax return and stuff and property ownership comes into it, planning is so critical to that.
Totally.
But yeah, many defence members, rent out their home when they're posted. How does the ATO treat that property when turning it into a rental property?
So yeah, pretty much flowing on from before, when you turn your own home into a rental property, that's when the ATO treats it very differently. There's kind of 2 tax events that you need to understand. The first is what happens year on year on your tax return, being the rental income and the expenses each year. So you just record it in your tax return. The second event is the future sale, if you choose to sell it. This is where things can get a bit complicated because depending on your situation, you can either pay no capital gains, some capital gains, or a lot of capital gains. So the outcome, this is again, all the dollars are made in the tax planning. So I guess this is why we're going on about it. But the outcome does depend on the rules like the main residence exemption and the 6-year rule. Very important for defence members who move frequently to decide essentially what they're going to do with those properties. So yeah, if you understand those 2 rules and you get proper advice, you can set yourself up with a pretty strong tax strategy and avoid any nasty surprises if you do choose to eventually sell whichever of your properties.
Yeah. And again, just that planning aspect's so important. But, for the people that aren't planning and listening, I guess, what are some of the most common tax mistakes you see defence property owners? This is a common thread is the owner-occupying investment and moving around a little bit. What are some of the common mistakes that you see?
So I don't know if it's a mistake, but it's really, I guess, missing out here. A lot of defence property owners don't know what a depreciation report is. So many people have never heard of them, yet they can make a pretty huge difference on your tax return. So I'll just quickly explain what depreciation is. It can get a bit confusing, but I'll try and make it easy as possible. So depreciation is basically the ATO letting you claim a wear and tear deduction on the building each year. It's what we call a non-cash deduction. So you didn't physically get your wallet out and pay for that wear and tear, but you're still allowed to claim the cost of it. So that amount on what it will be depends on the age of the building, but we usually see for the newer properties, the depreciation is higher, so more of a claim. It can be thousands of dollars in extra deductions, so that's, it could be pretty beneficial for you. The key point here with depreciation reports is only a qualified quantity surveyor can prepare a depreciation schedule or report on your property. So your accountant can't do it for you, your tax agent can't do it for you, and if they are, big problem, because that's not legal. And to get one of these reports, it costs, the range usually costs around $400 to $800 depending on your provider. And the cost of that report as well, like the tax return, is also fully tax deductible as well. So that can go on your tax return itself. The part that most people miss with claiming depreciation is what happens when you eventually sell the property. So any building depreciation you've claimed over all those years, you put it in your tax return, then gets added back in when calculating your capital gains tax. So to put that in simple terms, the ATO basically says, okay, well, over time, you've said it's worth less because you've said to us the building is now wearing out. So your cost base must be lower now. And what I mean when I say cost base is what the property really cost you to buy. So if you're going to lower your cost base because you've had the depreciation, all that's going to do is increase that gain or the capital gain as the building cost you less, but now you sold it for more. So that spread is larger. Yes, depreciation is incredibly valuable, but you do have to understand both sides of it. So yes, you get the yearly tax benefit and then the adjustment that happens when you sell. Just note that there are two things going on. So
such great advice, and I'll just put my 2 cents on it because there's a lot of, when it comes to depreciation, ATO allowing you to claim that because you are making a loss. That is so critical to understand. Like a brand new car, we don't drive it off the showroom floor and expect it to go up in value. We generally know it's just materials, tyres, engine, components that lose value. The house is the same, and once we understand property, that's all land content that appreciates in value, and the building depreciates, aka you're making a loss in that building. So the ATO are being sympathetic to that loss and allowing you to claim it as an immediate deduction. So when all these property groups out there are flogging house land packages to you, and they're saying it's great for depreciation, you can claim it and save some tax, actually just doing that because they're selling you that property and probably getting some big fat juicy commission from the developer. But just be aware that that depreciation and that tax benefit is a loss that you are making, and you're actually paying that back, like you mentioned, when it goes cost base. So understanding this and having a good accountant and some transparent property advice is critical because, tax, there are some tax benefits to property investing, but they should not be your primary motive. They are just an auxiliary benefit that comes with owning a property. You should have a clear, good thought out property strategy, and then if there's a little bit of tax benefits to that along the way, then happy days, but it shouldn't be your primary motive. But Carla, if you could sit down with some defence members, and give your absolute best top tips when it comes to tax and property ownership, which would save them a lot of stress, money and mistakes, what would they be?
This one leads on from that last point. So the next tip that I'm going to give is a pretty red hot one. So this is where everyone should pay attention. This can be a very favourable tax scenario and also a very doable scenario for defence members. So I'll just explain what the scenario is. So basically, you buy a property in your current posting locality, you live in it, and it's essentially classed as your own home. Then naturally what happens with defence members, it's your time to post, and then you go up to your posting location, you move into a DHA home, for instance, or a rental, and basically the home that you left, which was the own home, is now classed as a rental property. And what you do is you rent that home out for up to 6 years, i.e. the 6-year rule. Before that 6-year rule is finished, you sell the property. In that situation, in that scenario, you can claim all your depreciation entitlements as a rental property, and because it's still classed as your own home, you pay no capital gains tax on your home when you sell. So in that scenario itself, you can get the depreciation benefit from the rental property, and then the depreciation that's added back into the cost base is essentially irrelevant because you get the main residence exemption with it. So that's one of the few times the Australian tax law can be quite nice and very doable for defence members. But yes, like you said before, you need to choose your own home. So if you're going into the next location and you're purchasing another home, well, then you need to make the choice which is classed as your own home in that 6-year period. So again, planning, and that could be quite lucrative for you. So yeah, that's pretty much for a property one. The other one that I do see also tied to property, another tip, I see this all the time. So anytime that you're earning any type of income that's in addition to your ADF salary, you need to account for the tax on that income. So people just think, oh, I've earned this income and it's mine. Well, it's not. Some of it needs to go to the ATO. I see this with rental property owners and people making significant amount on bank interest as well. So it's normally rental gain or bank interest that they get caught out with this one. So if you are earning income from a property and it's making a gain, you need to set some cash aside from the rental to pay for its tax. That's going to be dependent on your marginal rate. However, I think a good habit to set is like set aside a third of the profit and consider that not yours. And that needs to go to the ATO at tax time in the balancing event. Alternatively, if you're not that diligent, you can also set up a pay-as-you-go system with the ATO throughout the year, kind of like how your employer does. And you can do it that way as well if you're not too good with it. Further to it, though, where members really, really get stung is if they've got a HECS debt on top of these additional income streams. Essentially, Defence won't make the adjustment for HECS if you've got these extra things on top. So you need to essentially tell them to increase the withholding percentage just so they can get the right amount of HECS out. Because HECS is calculated on all those income streams as well as your ADF salary.
And some really good tips and takeaways in there. But I guess there's probably a few questions that people aren't asking as well. So, when a defence member does their tax each year, what's one question that they never ask that they probably should be?
So it's kind of the common thread in this chat today. But, people usually ask us questions around reducing their tax debt when it's usually too late. So if you know that your circumstances are going to change, like your employment's going to look different, housing, investments, you're selling something, you kind of want to engage with your tax agent as early as possible. But we say, I think a good benchmark, at least 12 months out from what you think your plans will be. Tax itself is usually a household's biggest expense. And some, I guess, simple tax planning can literally save you absolutely thousands if done correctly, or with help with your tax agent as well. So in that, a fantastic resource I really like to help with this sort of thing. And it's quite actionable and easy to understand, and I thought it was helpful. But it's a book that I've read over the years. The book is titled, I've actually got it next to me here. It's called 101 Ways to Save Money on Your Tax Legally. This is the one here. I think you can get this one from Big W. $32.95 I got from QBD. So very affordable. It should definitely pay for itself. A new edition is released every year. And I was just essentially really impressed with how much I got out of the book. I'm not sponsored with the book or affiliated with the book, just FYI. I just personally loved it. So that's just really, really helpful, really cost effective. And it just says everything in plain English for, I think, the average Australian to understand. So very helpful.
Cool. So some really good tax tips in there. Definitely jump on it and grab yourself a copy. So I guess, if you could wipe out one bad tax habit, I guess, that you see in many, or most common across many defence members, and they keep repeating it year after year, what would that be?
So there's two, but the record keeping, if that could be done better, that'd be amazing. Typically not an area I've seen defence members flourish in. But this one's probably more important, and it's a huge one that I was kind of shocked to see at how many defence members essentially have multiple years of tax returns outstanding on their ATO portal. So I think this is where, tax got into the too hard basket for people, and they just thought, oh, well, I'll just leave it and it will go away. It definitely won't go away. There's those two certain things being death and taxes, it will stay there. So if you are seeing red and outstanding and things are flagged on your ATO portal, this is not good. And you need to deal with that and get that cleared. The ATO seem at the moment to be getting a bit tougher each year. And we have noticed that they're getting a little more heavy-handed with issuing fines for outstanding returns. So, yeah, I've seen a few people now, they'll come in and some do have 10 years worth of outstanding tax returns just sitting there. So you do not want that. Just go, if it's too hard for you to do it yourself, just go and get help and get a tax agent to hold your hand, because it doesn't go away. And, you don't want fines slapped on in addition to all the work that needs to be done as well. So, that's probably the biggest mistake I see a lot.
Yeah, if life experience has taught me anything, and this isn't tax or property, this is general life, I feel that leaving anything, sitting in that too hard basket doesn't make it. Yeah, it just
no way.
That worse. If there's
Yeah,
one thing that I'll 100% apply that to, is the ATO. They, leaving it in the too hard basket they don't
absolutely.
sit there and go, we'll take it easy on this one because he hasn't done it in 10 years. He mustn't really want to
Literally.
do his
They're even worse. And like the old army saying as well, bad news doesn't get better with age. And this is definitely relevant for that as well.
doing your tax is not a red wine.
Totally.
Cool. So, coming to, the defense lifestyle and a bit of that defense culture, why do you think defense culture creates such a unique relationship with money where, from deployments to allowances and constant relocations, like just talk us through some of that cultural and money sort of vibe.
Yeah, absolutely. So I think defense culture creates a really unique relationship with money because the system itself is, I think, incredibly complex. So there are so many allowances, benefits, rules, exemptions, exceptions that I don't think even the ADF member can really be on top of everything that they're entitled to. And that's just like within the organization itself. And then outside the organization, like I said, I don't even think most accountants really have a great idea either of what's kind of going on in the tax environment and definitely the organization itself. So I think like for a lot of young soldiers who live a pretty simple life, the idea of digging through policy and documents and the fine print is just not going to be appealing to that demographic. Again, it just gets all thrown into the too hard basket, and that mentality unfortunately carries over to tax as well. It's not really an exciting topic for them. It does feel like admin and work, and most people, just don't really want to do it in the first place, let alone optimize it as well. So I don't really think the culture isn't the problem. It's, I think, just the complexity of what's out there, and without someone who actually understands defense entitlements and is passionate about it, I don't think most members really get the full benefit of what they're actually entitled to.
Yeah. So do you think defense members get taught enough about financial literacy? And if not, like who's paying the price of that lack of literacy?
Yeah, totally. So my opinion on this one is that this is happening a lot earlier than when the defense member enlists in the organisation. So as we know, financial literacy in general is not readily taught in the school system. So really what ends up happening is it's either up to your parents to teach it to you or you need to go find out yourself. So that's kind of how it works. I know that this is not a podcast on politics, so I'm not going to go into my thoughts on why the current system is the way that it is. But however, yes, I think there is a gap. And as for who pays the price, well, the obvious one directly being the defence member, who usually ends up paying too much in tax. But the other one that's not as obvious is because there's a bit of a lack of education with finances, especially with the younger soldiers, the chain of command are now having to deal with finance and welfare-related concerns with soldiers in financial trouble. And that's not an uncommon thing to hear about. I think everyone in the organisation at least has one story about someone really going off the rails with it. And what that does is it just adds another workload to the chain of command. And they're already inundated with welfare stuff, so they don't need to deal with that further. But I do say, like, the good news, I don't want to be a doom and gloom story. The good news is it is 2026. That information is very readily available to go find out yourself. And if you're not happy, there's people that can help you along the way. So you shouldn't, I guess, sit there stuck and not knowing when it is an informative time right now.
And no one's going to care about your financial position more than we do. So, like you say, we're in a world of information, and so much are up in the tip that, and there's so much help. Your chain of command is only there to support you through when they're not financial tax, but the advisors working. So onus is on the member to get educated. What are some of the more surprising things that you've learned about the financial laws of defence members since you've started, especially on duty tax?
Yeah, so I was like really, really surprised initially at how little clients know about tax in general. That actually goes amongst all ranks, and it's not like the officers know more usually, and in fact can be a little bit more difficult to handle sometimes, just to explain things and entitlements and that sort of thing. I think some people want to interpret the tax law the same way that they might read Pac-Man. My opinion is the tax law is much tighter, and the ATO can be pretty ruthless in what they will pass through. But yeah, after our first few years, it kind of just highlighted to me how important it was for me to explain tax to our clients as clearly as possible, so that essentially they're not leaving feeling like, they're confused or anything like that. We want them to sort of feel in control of their affairs, and definitely optimize their finances. And yeah, just understand what they're signing off for on their lodgement forms, and just not being confused. So that's kind of the main thing, is just communicating back to them in plain speak as best as possible, what their tax situation looks like.
Yeah, amazing. We could really be a little down. I think there's certainly be
that's true.
Then so if you go down, I guess for me, to highlight some key takeaways, the front-end taxation system is essentially you're guilty until proven innocent, almost. And the way to prove your innocence is that record keeping that I've mentioned multiple times through this journey. So if you're going to claim it, make sure you've got records of it. Second key takeaway for me was play straight back with so much opportunities to maximize your tax return through property investing and understanding this, when get the right advice to build your team so you can legally maximize your tax return without having to go outside of those left and right of that. There's no need for it. Just get education with education up to make better important choices. Another takeaway for me was the planning and tax strategy. So plan with foresight, not fix a problem in time. So the more that you plan, better the return can be, and better prepared than being with this for lodge. So they're kind of like big takeaways for myself. Any final tip points or key messages that you'd like to highlight?
No, I think I've covered some good golden nuggets in there. Hopefully your viewers could at least, even if I shared one valuable thing today that could really just help them, or at least just starting the conversation to be like, hey, now I've got something I can actually take to my tax agent. A lot of the time you don't need to be the expert on this stuff. You just need to know about it to take it to your team. And when I say team, have your team on trusted providers that are on your side, your financial side, and you go, hey, I just heard about this thing called the 6-year rule today. Tell me about that.
Yeah.
Go figure it out.
So,
get your team to go do it.
The purpose of that episode is not to turn someone into an expert in this. Is purely to bring their awareness to it, to help members out there at least to start thinking about it and potentially trigger these conversations with their team of advisors and stuff. So I'm sure everyone out there has hopefully found this very valuable, as I have. If I love for people to share the episode, listen along, share it with a friend. And if you want to go deeper, connect with Duty First Tax to the Spanish Buyers Agency, please reach out. You'll see us on socials, Spotify, and Apple Podcast, and then reach out on the Duty First Tax website or the Spanish Buyers Agency website. If you kind of get horrified, get hold of my story, and I'll put anyone in contact for that workflow. Thanks for listening. Hopefully that was very valuable, and for her next episode, we'll speak soon.
Awesome. Thank you so much for having me, Kane. It's always a pleasure.
Awesome. Thanks.